Hey everyone, welcome back to another edition of Super Prime UK with your MJ Group Super Prime valuation specialist, myself, Rob Cohen.
And myself, James Wild.
All good, James. Welcome back.
Thanks very much. How have things been with you, Rob?
All good, busy, flying around, meetings. As we say on the show, with all that uncertainty and volatility, people want up-to-date information, intel, data, reporting what's happening, and literally day after day it's bank after bank, lender after lender after lender, sharing all the insight for what we see on a daily basis.
That's it, and not long to go now until the World Cup, obviously, Qatar.
World Cup very soon. Start planning those socials, get the old sweepstake out, and get those work events booked in early to hopefully enjoy a successful tournament, hopefully for England's sake.
Yeah, could close out. It's likely that Arsenal look like they will be top at Christmas.
Let's hope so.
City hot on the heels.
One more game to go. Let's hope Arsenal can at least be top at Christmas to give the red side of London a bit of festive joy this year.
Okay, thanks, Rob. So in terms of the data this week, just to give you some of the headline figures. New instructions, Rob, about average 315 new instructions this week, so falling into the averages which we've seen for the year. Under offers fairly strong, 180, while sold figures are 145. So again, most of the data for this week in terms of the property stats, Rob, they're about in line with what we've seen for the 2022 averages, so that the market's being in a robust state at present.
Yeah, I think it's important for everyone listening. The market can now pretty much be split up in two, where we have prime and super prime, which is transacting at relative volumes, hence the numbers that we're reporting on a weekly basis. And then there's the rest of the market in the UK that without question has seen a big slowdown in terms of volume of transactional evidence. And I think we're in a bit of a two-tiered market at the moment. I think that's quite important to understand. So prime and super prime is ticking over with some very good, strong transactions taking place, especially in the super prime, 10 million plus. And as you go down the ladder, things are pretty much slowing down. So a bit of a two-tier market currently we're seeing on a transactional position.
That's it, thanks Rob. In terms of the sale of the week this week, Wetherby Gardens, SW5, 16 million. As you mentioned, Rob, a number of super prime transaction deals, they are happening at the moment in excess of that sort of 20, 25 million mark there. But obviously, a lot of those deals just completely off market, sort of buying agent to buying agent being involved in a lot of those. Just in terms of some more price statistics and data this week, Halifax released their house price index this week, announcing the average house prices fell in October. It's the third price decrease in the last 4 months, a drop of 0.4% in the latest data for October. It's the sharpest fall, Rob, since February 21 there, which was obviously in that period of the last of the lockdowns that we saw for that 3-month period. Average price is now just below £293,000 for the UK. And in terms of the annual price growth we've seen, that has cooled to 8.3%, down from 9.8% in the September. And what we have to remember here, Rob, the prices are still at sort of record highs where they are now, and whilst the market, as we can say from the data, it is cooling, some of these prices are yet to sort of come off yet at all. We're going to have to wait and see what happens there. But there's obviously the early indications of the market cooling. We're just going to have to see sort of how much the market comes off in the next few months.
Yeah, I think again, with a lot of the data that comes through, a lot of the generic data is 2 to 3 months behind the actual live position. And when we're reporting to you each week, we're giving you a very much a live perspective of what's happening on the ground. And then there's other data sources that feed through that are generally behind the market, and so 2 or 3 months. So yes, you get an early indication, but maybe it's not as live as we would be hoping for, hence the reason for the information we provide you all with and the updates that we give you every week.
Yeah, obviously the big news end of last week, Rob, the Bank of England chose to raise the interest rates by 0.75% to bring the base rate up to 3% now, with the latest rate rise being the largest incremental rise for around 30 years, whilst interest rates are now at their highest for just over a decade. The Bank of England did caution, Rob, didn't it, after the announcement of the rate rise, that the interest rates probably won't have to go much higher than the current 3%. So we'll have to wait and see if, after the Monetary Policy Committee meet in December, whether there'll be that 9th consecutive rate rise next month, Rob.
Yeah, I think it will be. At the same time, everyone is waiting for the budget and the revised budget, and that's what really is keeping, I suppose, people sitting on the fence. They just want to understand what domestic UK fiscal policy is going to be for 2023 under the new government, and that position is critical and obviously has a huge relationship with the Bank of England and the rates.
Yeah, that's it. There's been a lot of rumours that in the last few days about the possible scenarios of the budget next week, but we're going to hold off just to bring you the official news of that next week after the 17th, when the latest autumn budget will be announced. Just on rates, Rob, obviously the rate rise last week, average 2-year fixed is now at 6.53%, so it's just a slight incremental rise there, and also the average 5-year fixed now 6.36% there, so quite a if we think back to a period of about 12 months ago, these rates really have shot up, and we're going to have to wait and see what happens with the base rate in the coming few quarters. I imagine that is going to come down to some of the long-term averages, closer to around 4.5%, what you can get for some of these deals, certainly the sort of 2-year fixed deals. So possibly a couple of percent there. These could come off in another 12 to 18 months' time. We're going to have to wait and see what like you say, Rob, how the economy performs and where interest rates and inflation take us. Just in terms of some property news, obviously Persimmon cut their dividends this week after some of their sales volumes have been reducing there, and this comes at a week or so after Michael Gove, the Secretary of State for Levelling Up Housing and Communities, did underline his manifesto pledge for the UK building 300,000 houses per year by the mid-2020s. Later going on to say that the building of the construction of the houses would be for ownership and for rent. I think just underlining what a crucial sector the build to rent is within the construction industry there. As you can see, we on the screen here, the graphic we've got, in the past few decades, the highs we've had, 240,000 has been the highest number of new dwellings that the UK has built year on year, which came in around the year before the pandemic, 2019 to 2020. So as you can see there, we're some way below the targets that we're looking to meet by the mid-2020s. So I don't know what the new government initiatives are going to be there, Rob, in terms of house builder incentives, but obviously a big incentive being removed from the market for them, which was Help to Buy, whereby all new applications for that were ceased on the 31st of October. So now that deadline has passed. I believe the long stop for the existing applications which are pending and subject to those units completing is around March 2023, by which time we're going to have to see if there's any impact on the market there in terms of first-time buyers. Obviously, house builders now, people have now got to save up that larger deposit unless they're taking out a 95% mortgage, Rob. So we're going to have to see how that impacts the market, because that would really work towards facilitating those buyers for some of the proposed 300,000 new dwellings per annum, which we're looking to achieve. In terms of stamp duty receipts, Rob, Q3 2022 was the most lucrative we've seen on record, with the stamp duty receipts hitting 3.59 billion. Just a point on that, a lot of the revenue, I imagine, was from the buy-to-let and the second home buyers, whereby they're liable for an extra 3% surcharge on top of the prevailing stamp duty rates, from which considerable revenues are collected. Now, Rob, the government doesn't give a breakdown in terms of what stamp duty receipts come from, which sector of the market, and which particular price band they might fall into, but it's probably estimated that around 40% of the stamp duty revenues, a lot of those will be 1 million plus, 1.5 million plus purchases at the upper limits, the maximum threshold for the stamp duty. 40% or so of those receipts are going to come from such a small proportion, maybe less than 5% of the total number of transactions. And I think that's the key point, isn't it, Rob? That the stamp duty is really more penal at the higher end of the market. And I'm not sure if we're going to see people's average holding times for properties of that sort of 2 to 3 million plus, whether that's going to lengthen. Obviously, at that sort of level of the market, they're paying around 15%, the sort of maximum stamp duty threshold is 12%, in all likelihood another 3% surcharge, taking you to 15%. And obviously, I don't know if we're going to see another 15% growth in that market. So a lot of them probably working within a 5 to 10 year cycle and holding period. Otherwise, they might be looking to go through a period of renting, possibly a premium or a luxury home for that period, as it be a lot more of an economic move for them.
Yeah, I think it goes in line with what we commented before on the dual market. I think a lot of those receipts and revenues can be contributed to prime and super prime, and it will be fascinating to analyse the data for Q4 when this year closes out. Even if there is a decline in transactional volume across the entire market, if prime and super prime continuously perform with good levels of transactional volume, maybe the hit on the revenues won't be so bad, and that's one to watch, and let's make sure we report that at the end of the quarter. Also, just want to say a big thanks. A lot of the banks and the lenders have been hosting events as we get to that time of year, some really good events and insights into what's happening in the lending and the financial markets through real estate and property. Just want to say a huge thank you to all of those lenders and banks and organisations that have invited James and myself over the past few weeks. Brilliant events, great meeting up and great insights. I really appreciate that. And we will see you all next week after the big budget, which will decide where we're heading in the UK in 2023. Thank you, everyone. Thanks, James.
Thanks, Rob. Thanks so much, John.